You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Servati.
Welcome to another edition of the Big Cast. My name is Glen Servati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we have what I think is a particularly appropriate interview for you today with some hopefully very new information for you. James Anderson, the Managing Director of Paze, the recently established unit of early warning services that is launching another digital wallet into the marketplace. This one with a bank-centric focus to it. And depending on how you want to think about it, maybe not even a digital wallet. James will get into that a bit. But had a chance to hear him speak recently and got a little bit of a different impression of the wallet than I originally did from the early report. So I thought it would be great if he was willing to share some of those with us. And lo and behold, he was. We'll be talking to James in just a couple of minutes. You can always check out more about the Best Innovation Group at our website, big-fintech.com, where you'll find out all about our products and services. A little more on that coming up in just a second. But for now, let me just do our usual quick run-through of the news going through the marketplace in the fintech and credit union worlds. The Credit Card Competition Act seems to be gaining steam again. We talked about this a little bit last week, and it seems like there's definitely some momentum there. The Merchant Advisory Group, the group that's often been much kind of a real bulldog on this space around reducing card interchange, they seem to be particularly active and energized around it this time around. And it's interesting that the entire initiative seems to be, at this stage at least, quite GOP-led. Which is ironic given that it's most commonly associated with Senator Dick Durbin, who is a Democrat out of Illinois, who is still one of the co-sponsors of the bills. There's it's being positioned as a bipartisan bill, and I guess if you base that on the technical definition that there are Democrats and Republicans involved, that is factually accurate, although it does seem at this point to be very more heavily Republican-driven. One of the things that I saw the Merchant Advisory Group pushed out is an opinion piece that was printed in The Hill, which is focused more on governmental relations, and a website that I find to be extremely valuable. And it was something that they did that I'm guessing was primarily meant for the legislators out there. It was written by the president of the Job Creators Network organization that I'll come back to in a minute. And the headline talked about how this new bill on the credit card interchange would help small business, which I thought was, this seems to be kind of the interesting kind of positioning of the bill. And I think that's to be debated, let's put it that way, in terms of whether this would actually help small business. Let's be real honest about this one. It is a complex issue. And it is there's a lot of moving parts. There's a lot of different constituencies. They're not all moving in the same direction. And it's really difficult to get the average individual to really get their arms around this one. And that's why I think it becomes challenging to find talking points that can inflame people. Small business, job creators, those sound like pretty good angles on it. Another one that this article went after, which I think is willfully kind of misleading, let's put it that way, is that it sets up Visa and MasterCard as the bad guys. And the fact that they have monopoly powers and we shouldn't be letting them charge whatever they want for interchange. Okay, Visa and MasterCard do have the vast majority of the market in credit card swipes. Visa and MasterCard do not get the majority. In fact, they get a very, very small slice, as I'm sure I'm telling people who already know this, who are listening to this podcast, of the actual interchange revenue. It goes to the issuers. It goes to other players in the network. And that's where I have a hard time with the small business one. I don't think that people understand that it isn't even going to interchange. Much of that is also being set by the merchant service providers that actually help them with additional wraparound value-added services to basically take care of the last mile on this stuff. So, it's an easy way to get at it. I also think it's interesting that the Job Creators Network talks about it in terms of small business. If you actually kind of peel back the onion and look at that organization, there ain't a lot of small business there. It's basically big players, very much like the Merchant Advisory Group on there too. On the flip side of that, Well, actually, and there's also no evidence it would save consumers money. We'll get back to that as well. On the flip side, America's credit unions, you'll see their logo on the website, has put out a separate kind of informational process under the banner "Interchange Works." Kind of a "it ain't broke, don't fix it" kind of approach to it. They talk about the fact that one of the things, and again, finding things that might resonate with people, even if it's not reflective of the broader story, data breaches. One of the things you're doing in terms of dealing with interchange is funding the security that goes around making sure you don't have massive data breaches and fraud. Absolutely true, and I agree with that one. This is the one that I find even more interesting. They point out that, when you think about the argument that, this will be a pro-consumer thing, the Federal Reserve Bank of Richmond, pretty darn authoritative source if you ask me, a pretty impartial source, did a study based on the Durbin Amendment that passed through with the last financial crisis that we went through and actually affected debit card. This one's focused on credit card, but that was debit card interchange. They found that 98.8% of merchants did not pass through the savings. So you don't wind up with a consumer benefit on it, which I find very interesting. The other thing I find interesting is neither party has talked about this, and I think it's the real ace in the hole if you really want to activate the consumer, and it's probably going to argue in favor of no change, rewards. If you really get down to it, what a lot of interchange is funding is consumer rewards, cash back, trips, airline points, whatever you want to call it. And it's kind of cynical because that's a separate conversation. It may not be necessarily the most equitable way of passing along these economics. But if you tell consumers that if if this bill passes, you can say goodbye to your rewards points, I think you're going to get a little bit of an uprising. And that's, if you look at it, that's exactly what happened. When there was a reduction in debit card interchange, there used to be debit card rewards programs. They were never as valuable as credit card rewards programs because there wasn't as much money to go around, but they went away. Anyway, I'm sure we're going to have much more on that, and we'll post the link to both that article in The Hill and also to that site from America's Credit Unions around Interchange Works. Another headline I thought was interesting this week was Citigroup's CFO, Mark Mason, speaking at a Morgan Stanley conference. And this actually, again, we'll post a link to this article as well, talking about job cuts. And they're in the process of reducing their workforce. This is where I've found there to be a real, again, you have to take a pretty long view of things. That conversation about automation and technology and is it going to cut back on jobs. For the last, 10, 12 years of the economic cycle at least, probably around that, because coming out of the last downturn, in 2008, 2009, where bank jobs were decimated, all the talk about technology was to improve customer service, add new revenue, and it really wasn't being directed toward the expense side of the equation. It was ways to find new ways to, relate to customers, appeal to customers, and generate new revenue sources. This is the first time I've seen somebody in quite some time very visibly come out and say, yes, and we are using technology to automate so that we won't need as many people. We're actually, the pendulum is shifting back to that argument, at least in Citigroup's case, of using financial technology for cost savings. Now, and cost savings that literally fall to the bottom line as opposed to redeploying those savings someplace else. That's always been true. It can go either way. The focus has been very heavily on the revenue growth side of things recently. It'll be interesting to watch if we might be seeing that shift a bit. The article that I'm posting, actually from CFO Dive, was, again, a headline that I'm not crazy about that I think was actually inaccurate, that talks about the 5,000 job cuts that Citi has announced. It says technology initiatives will drive 5,000 cuts. He didn't say that. He did say that it will actually work in direction of reducing headcount. He did not say, in fact, if you read the details, some of those are just eliminations of positions where they're shutting down business units and things like that. So the technology and automation is not costing 5,000 Citigroup jobs, but it is moving in that direction. Another thing I'm going to post is a link. We had a couple requests for this based on our interview from a couple weeks back. a link to the list of the great supply chain songs of all time. So this came up based on Gordon Lightfoot and the wreck of the Edmund Fitzgerald. So if you want to take a look at the list of the greatest supply chain songs of all time, we'll have that out there. And also a link to our past podcast where my friend Mike Lev and I spoke about ChatGPT and how he used ChatGPT to try to get a little bit more assistance in finding supply chain related song titles and lyrics, and discovered ChatGPT flat out lying to him, which was pretty fascinating too. So you'll find the links to those. If you don't want to be lied to with things like ChatGPT, I love the way I'm doing this tie-in. If you don't want to be lied to, think about the Best Innovation Group. We have opened up a new service line around working with artificial intelligence and how it can be used in the credit union world. Something they absolutely need to be looking at. It can be done effectively, it can be done cost efficiently, and it can be done without lying to you or to your customers and members if you do it properly. So we'll post a link so you can find out more about the Best Innovation Group services along those lines. With no further ado, James Anderson, the Managing Director of Paze, which is a unit of early warning services. Really appreciate him taking the time to talk. Let's have a listen. I'm speaking with James Anderson, who is the Managing Director of Paze, part of Early Warning. I'm sure you've heard about them before, working on the latest entry into, well, I'll call it the wallet wars. And as you said, James, first off, thanks so much for taking the time to talk to us. But you had mentioned that you don't necessarily even think of Paze as a wallet, a digital wallet per se, but it's just kind of the easiest way to help people understand, where you're, kind of participating in the market. Can you say a bit more about the terminology?
Yeah, sure, Glenn, and delighted to be here, and thanks for the opportunity to talk to you and to your listeners. So, I've spent quite a bit of time in the payments industry, and this wallet word has been floating around for a long time. It's never a word I've particularly had a strong pull to, and really that's because I see that a lot of the time wallets are not something that, even in the physical world, are super exciting for consumers. And I think the opportunity to make online payments is super exciting. And at some level, the wallet word kind of undermines that. But it's there's no other better word, so we use it. The way I think about what we're doing in Paze is really updating how cards are going to work online. If you think about e-commerce, it's been around for now more than 20 plus years. It is heavily centered on cards. Cards is really how consumers expect to pay online. Cards is how the majority of merchants get paid online. And yet it's still not a great experience for either party. And there's opportunities to improve it and fix it, make it more secure, make it more easier for consumers and better for merchants. And that's what Paze is really about. And so we're doing things that would definitely look like other things that call themselves wallets. But we're also doing some other things, particularly on the merchant side, where we're doing some things that are quite different and taking a different approach to the market. So yes, we call it a wallet because that's the term of art that everybody associates to making payments work better. But it's maybe it's not your grandfather's wallet.
And let's touch on in a little bit later the piece around how you're doing things differently for the merchant. But a couple of things I heard there. First off, when you mentioned cards, Paze covers both debit and credit cards, as I understand, right? And
Correct.
Also, and something I did not understand until fairly recently is that you are focused entirely on the online commerce experience. So this is not intended to be a point of sale wallet for the brick and mortar.
It's not, no. So as we looked at the market opportunity and as we looked at research about where consumers continue to have challenges around payments, we saw that the online space was growing very quickly, but still had significant opportunities to make it work better. Whereas by contrast, the physical world is pretty well served. Obviously, cards work very well in the physical world. And then there's been some other people who've built capabilities to take cards and put them onto phones, which also deliver good experiences for the consumers. And we're in the business of solving problems. Any business has to be in that business of making the outcomes better for the participants. And we saw a big opportunity online, and that's what we've gone after. Who knows, over time things can change with initiatives, but right now it's 100% focused on online commerce. What's interesting, Glenn, though, I would point out is that I think the former, very strong distinction between what the worlds of card present and card not present, they really are dissolving, quite quickly as everything becomes digitized. And so I was at a restaurant the other day, and so you would have said 5 years ago that a restaurant is a classic card present environment. And I got the bill came, and I had the opportunity to scan a QR code and do essentially an online pay from table experience. And in Cardland, that's a card not present transaction. So I think the world of CP and CNP is beginning to break down. And so there are opportunities where Paze will be part of experiences that happen in the physical world. It's not all going to be mediated, through the internet in the traditional kind of online browser web session version, just because the world is changing and people are looking for, putting out into the market different experiences to serve cardholder needs, merchant needs, and the online is kind of moving into the physical world would be how I would characterize it. And as Paze will go there as well.
It makes good sense, and it occurs to me now when I get my alerts, on my phone that your card may not have been present for a transaction. Doesn't state it full stop, and I think I do recall a couple times when, hey, I did have my card there, and it still says that it was a remote transaction that's giving me added protection for. Now, Paze falls under the umbrella more broadly of early warning systems, and again, one of the keys here is early warning is owned by several of the major banks in the U.S., which again kind of differentiates you, as you said, from the wallets that are actually resident on the phone devices. But early warning is also very well known to people as being the owner of Zelle. And as I understand it, the early warnings made the conscious decision to really manage Zelle and Paze as two separate entities, which would not have necessarily been my guess of how to go about it. I'm kind of curious if you could say a bit about that rationale.
Yeah, for sure. So Zelle, as you say, Glen, is very familiar to people. It's extremely successful. It's gone, it's been around in the market just 5 years, but it's the largest P2P service by dollar volume, is my understanding. So it's a very successful service, and I think it's something that everybody at Early Warning feels very proud about and feels great about, and it's just definitely delivering value for consumers and for the financial institutions that participate, which is now more than 2,000 financial institutions. And so I think in many respects with what we're doing with Paze, we want to emulate that success, but there is a very big difference in terms of focus. P2P is a very distinct use case. It's a very valuable use case for consumers, and it's got its own team here at Early Warning working on it. And getting into the online commerce business, as Paze is doing, is quite distinct. And there's one very distinctive, very serious difference, which is that Paze, the money comes out of a card. Its card is used to mediate the transaction, whereas in the case of Zelle, the money comes out and goes directly into the comes out of and goes into the bank account directly of the participants to the transaction. So there's a material difference, and that really was something that made us realize that we needed a different brand. And then I think the question about organization is really just a question about how can you be maximally effective at delivering this program. And the decision was made to have a dedicated team, which I have the privilege of leading, to build Paze out from scratch. So I joined Early Warning August 1st and last year, and have been working and building a team and building a product ever since. So it's definitely part of Early Warning. We leverage a lot of the capabilities of Early Warning, and obviously we leverage the corporate entity, but we run it as a separate group within the company.
That makes sense. And now that I think about it, you're 5 years for earlier in the product life cycle, so it makes sense.
Correct.
A different approach, and you've got the merchant angle to deal with as well. Speaking of which, and given that I've been in the payment space for some time as well, you're dealing with that classic network effect where you've got to get the adoption running on both sides with the consumers using it and also have the merchants ready to accept the card.
It's chicken and egg time.
Exactly. And I like the approach you're taking. I understand that you're actually going to have, and first off, you've got, I forget how many millions of cards are represented by the issuers that are part of Early Warning's ownership ranks.
Yeah, so I think
early start.
I'm not sure I can share that big number, but what we've announced is that when we launch, the full commercial launch of Paze, we will be loading more than 150 million e-com active cards into wallets. So we took an approach, and it's very much around how do we show up with a value prop that's relevant for consumers and merchants with as little friction as possible. We took an approach that said we need to take some of that friction away from wallet creation. We don't need to ask consumers to create a wallet. We can actually do it for them. And so the participating financial institutions share certain key data with early warning. And based on that data, we create a wallet for an individual consumer, which has in it the ecom active cards, whether credit or debit, from all the participating financial institutions. So when we start, that's going to be more than 150 million cards, and that's just based on the 7 owners. But I want to stress, a very critical piece of the strategy and of the mandate is that what we're building with Paze is, by design from day one, infrastructure for the whole of the financial industry to take advantage of. So all financial institutions will have the opportunity to connect into Paze, to make it their own, to bring their cards and their relationships to it. And so we're actively in conversations beyond the owner group to get financial institutions, whether large or small, because they're all important to an individual consumer. We want them all to be working with us to make Paze as big and powerful and strong for consumers and merchants as it can be.
And that's like you said before, it's like Zelle. I mean, you've got two, I forget the ownership group is 7, 10 large FIs, but you've got 2,000 FIs on Zelle.
Yeah, correct. Exactly. So very similar strategy in terms of building infrastructure that everybody can benefit from. It's a huge privilege to have the 7 owners as our first lead customers, because they obviously are some of the larger FIs and they obviously have a lot of credibility. But we want to build it, and we are building it to be available to everybody. And so we think that's super important. And again, it comes back around to what's important to a consumer, what's important to a merchant. What's important to a consumer is convenience and the opportunity to use the cards that they have and that they want to use for e-com available in the wallet. And we don't presuppose who that comes from in terms of an issuer. That could be a local credit union, or it could be one of the national banks. Every card is created equal in that regard in our mind. And the merchants, their interest is in converting interest on the consumer's part into a transaction. And again, they want to maximize the choice that the consumer has in terms of payment method, and also deliver convenience. So it's directly on strategy to make this a very big tent and invite everybody to be inside the tent.
So whether for a participating financial institution, a card issuer by definition, I guess,
yeah,
whether or not they're an early warning owner or not, the process, as you said, because you're kind of preloading or kind of pre-populating wallets to simplify the process, the onboarding process for the consumer, they basically provide you enough information so you can have it ready to go. So the consumer basically just clicks T's and C's and they're ready to go.
Yeah, exactly. So that's pretty much it. So everything is preloaded into the wallet, and there's what we call a wallet activation or a wallet claim process. And there's really 2 ways that the consumer claims their wallet. Our preferred way is that they are logged into one of the participating financial institutions, either online or mobile banking or whatever tool that financial institution offers, because they're fully authenticated to the bank. Then they're presented the opportunity to claim their wallet, and then there's a secure handover between the FI and Paze, and we're able to know that it is the consumer because they successfully logged into their FI. There's also another flow that starts on the merchant side, and in that case, we have a full multi-factor experience where we ask the consumer for something they know and something they have, and we use that to be sure that it is the right consumer. We're very, very conscious and mindful, obviously, that anything of this scale becomes a potential vector for bad actors, and we want to make sure we're doing everything to prevent that from starting. So we take the security angles of this, of course, very seriously. But yeah, so there's this claim process, and once the consumer opens up their wallet, once they've claimed it, we want them to see all of their e-com active cards that they spend, that they use online today. So that's our objective. Now, we're not going to start with all of them, obviously, because we're going to start with the owners and then expand as quickly as we can. But our point of arrival is ubiquity on the consumer side and also ubiquity on the merchant side, where we want it to be the case that every consumer that has a card has the ability to use it through Paze, and every merchant that accepts cards has the ability to accept them using Paze. That's our point of arrival, and kind of our North Star.
Okay. Now, as you mentioned just now, so if a consumer actually is a holder of two different cards from two different institutions who are both participating, and whether they're both preloaded or whether they can actually go in and load a second one later, then it's just a matter of toggling between the two, or what's the process there?
Yeah, correct. So when you log into the wallet and authenticate yourself to the wallet, you're going to see the card list. The first time it's going to be sorted randomly, and then the consumer can select a default card if they choose. And after that becomes the one that shows at the top of the list. And then everything else stays in the random order that was initially started with. And then as cards get added over time, they show up second in the list after the default card. So we've tried to make sure that it's equitable, and everybody's cards are treated the same. It's a rules-based system, and the rules govern the behavior of the system. And so everybody's cards are treated the same, whether they're an owner or a non-owner, in order to deliver, with the focus being that we want a super predictable experience for the consumer. The consumer really should be the person who chooses which card shows up and where they put it in the lineup.
Makes sense. Spin the roulette wheel, find out where it comes up.
Mm-hmm. Yeah.
You mentioned before, anything you can say about the way you're approaching the merchant side any differently than other wallets? I don't know if that's anything.
Yeah, for sure. So I think, from our conversations with merchants, we think that there's a set of common values that they're looking for. I mean, they want to do a couple of things. One of the things that they are very keen on doing is building and maintaining close relationships with consumers. The same way the banks do around banking, the merchants want to do around selling things to the consumer. And so we fully support the use of the data that a consumer has in the Paze wallet to be used to create an account in the merchant domain. So if a merchant, if the consumer says, I want to buy from this merchant again, we allow the data in Paze to be used with the consumer's permission to create the account. Everything I didn't mention, but all the card credentials inside Paze are tokenized. So we're not putting any real card numbers into Paze. So we're using only tokens to deliver the highest and best level of security and convenience. But some of the merchants that we've talked to, they want to take the token that they use for the first transaction and then be able to get what's called a card on file token from the networks. And we support that ability. So the point being, Glenn, we're not trying to drive the consumer back through the Paze wallet experience every time that they go to buy something online. If as a result of discovering a new merchant, they might do the first transaction using Paze and have a delightful experience. They decide that they want to continue to buy from that merchant. They want to have an ongoing relationship with that merchant. We allow the merchant to build that relationship. And we may never see the consumer again at Paze as a result of that merchant relationship, but we're okay. We're happy that that customer is happy, that a merchant is happy, and we hope that they'll use Paze again at another new merchant that they come across. We're really about, again, delivering better outcomes for consumers and merchants at scale around e-commerce. And we define that quite broadly, as opposed to narrowly, which would be the only good outcome is a Paze outcome. There's lots of good outcomes that can result in a happy customer and a happy consumer and a happy merchant, and we want to support all of them.
That's interesting. It's a very altruistic approach, and presumably kind of betting on the fact that pays out in the long run with more repeat business.
Yeah, and I think it kind of comes back, Glenn, to the point which you made earlier on, which is early warning is owned by 7 large FIs, and our job is to help all FIs serve their customers better. And customers of the FIs are, of course, consumers, but they're also merchants. Merchants obviously participate and have banking relationships. And, there's an existing economic arrangement around cards, which, all the financial institutions understand. and they're happy with, and they want that to, they're happy to see that continue. And exactly how that comes to life, we think that we can help it through Paze. But if there's an outcome that we help facilitate, a card getting loaded and stored securely into a merchant world, into a merchant domain, and that consumer is happy to use it directly through a card on file transaction, that's a good outcome for everybody, including our owners and including the other financial institutions that participate. We're thinking that we're trying to make sure we keep our eyes on the big prize, and it really is possible only because we are owned by the financial institutions. We're not what I would call an over-the-top player who is trying to figure out how they extract value out of the payment ecosystem. We're already in the payment ecosystem through our owners, and we just want to make it work better.
Yeah, I mean, that you got to the point even before I did. When we talk about, bank customers, we often think about the consumer. But the bottom line is these merchants, particularly when you're talking about the largest banks, these merchants are the bank's customers as well.
They're very strategic customers. They have obviously multiple relationships around credit and around processing and around transaction banking. Those things I'm not privy to because of where I sit in the ecosystem, but I used to run commercial at another company, so I understand commercial payments a little bit. And so, we're trying to facilitate. We have a role by creating Paze to facilitate better relationships and outcomes on the consumer side and on the merchant side, and we want to do both.
Makes sense. So can you say a bit, I believe you're going to be doing the true live rollout a little bit later this year. What can you say a little bit about your the plans and the sequence of events people should be expecting to see in the marketplace?
Yeah, for sure. So we're working hard. We've been working hard on the development, and we're just moving into pilots. We're going to be going into a series of pilots, which would give us the opportunity to test for technology, test for user experience, make sure what we think consumers understand, that they actually understand. We don't want to presume that we know everything. And so I think we're going to be doing that probably through the tail end of this year. And then we're finalizing right now the kind of plans for how and when we do the big commercial launch. It's probably going to be early next year, I think is most likely now. Really to make sure that what we deliver to the consumers and to the merchants is, of the highest quality possible. We've done our development work. We feel confident, but we want to make sure that when it gets into the market in front of live consumers, it delivers on the highest possible standards. And we think a little bit more time and some scaled pilots will give us ability to make sure we hit our mark on that front.
And I assume those pilots are taking place primarily with customers of the owner FIs?
Yeah, so I think we're going to do a couple of things. We're going to pilot with employees first, because obviously there's
friends and family. Yep.
The classic friends and family, but actually employees. And then, then there'll be we're anticipating a scaled up kind of beta program where consumers of those early financial institutions will have the opportunity to opt in and then build a wallet or have a wallet built for them, and then the ability to use it at participating merchants. So we think that there's what we're doing in terms of scale from day one, and 150 million is pretty unprecedented, and we want to just make sure that that's a great customer experience all around, and we're confident it will be, but we want to verify that as well as be confident.
Makes sense. If people want to find out more, I believe there's a place to sign up for kind of ongoing updates on your website. Is that the best way to do
it? So we have the URL paze.com. So that's the best place to go, is paze.com. And then there's a place to sign up. Also look out for us. We'll be at a number of industry events later on this year. We're showing up at different events. So we want to get the word out. We want to invite people to learn about it and to put their hands up. So I've been at a number of meetings talking about it, and the response has been very positive, which is very gratifying. And we want to engage the whole industry. So reach out to us through paze.com, and we'd be delighted to expand the world of Paze.
And I'm assuming when you talk about reaching out to the industry, I'm assuming that means you're probably hitting conferences both for financial institutions and merchants?
Yeah, exactly. So we'll be at the MAG event on the merchant side, which is in Atlanta in September. I know that. We're going to be at a payment leader summit next week in Washington, D.C. So we're going to both sides of the ecosystem to make sure that everybody hears what's coming and understands it, and if they're interested in participating, knows how to reach us.
Wonderful. James Anderson, Managing Director of Paze, part of Early Warnings. I really appreciate you taking the time. This has been extremely enlightening.
Glenn, my pleasure. Thanks for the opportunity. Be well.
A couple things to fill in there as well. James also confirmed to me after we finished the conversation, there will be no quote unquote in the wild app for Paze. Unlike Zelle, if you may remember, and it still does exist, although it doesn't get as much attention, when you have to build out the network effect. Obviously, if you're going to make P2P payments, you have to have both the payor and the payee in the same network. They had built an app that was independent of the member bank so that you could still transact with Zelle even if your bank was not participating. That is not the case with Paze. It only goes through the financial institution, so the only people who are going to be able to use it are the people who are holding payment cards, debit or credit, that are issued by financial institutions that are part of the Paze network. So just one clarification there. Another, he mentioned being at the Merchant Advisory Group in September. For this audience purposes, I also confirm they will be present, and you can find out more about them at Money 2020, which is probably the easiest and I'd say largest get-together where more people are likely to track them down from the financial institution side of the shop. That, of course, takes place in late October in Las Vegas. I'll be there, and we'll be maybe tracking him down and having another conversation there, too, to see how things have been going over the course of the last 4 months or so since this conversation. Again, thanks to James Anderson for taking the time and for the folks at Early Warning Services for helping to set that up. My name is Glen Sarvati. You can find me through my firm, 154 Advisors. You can also find me on Twitter at 154 Advisors. You can find the Best Innovation Group on Twitter at Big FinTech, or our Grand Poobah John Best at JB FinTech. As I said before, big-fintech.com is the place to find out everything you need to know about the Best Innovation Group, including that new AI service line that I mentioned earlier, which you can click through on the product and services tabs and find out more about that. And if you want to find out more about the world of fintech and what we've been talking about, we've got new content for you here every Tuesday. I'm posting here wherever you get your podcasts. We would appreciate if you would subscribe. You can always find it on the website, as well as an archive of lots and lots of past episodes. Hopefully you'll take a look there. Hopefully we'll see you again next week checking us out. And until then, thanks so much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.